expense is equal to net income. Whenever questions are, told you statement of income, so you need to follow a PET formula or PET, some hierarchy. You need to follow that. Number one, net sales. So let me change the color first so that it's more understandable. Yes, so first you write down the net sales. Net sales include all the sales or revenue minus sale return, discounts, sales discount that you gave to the customers and all the stuff. So that's why there is a net here. So don't get confused, sir. What does it mean by net, net sales? Why not just sales? Plus, if you pay, close attention. So this is the real balance sheet. This is the real income statement of GAAP Incorporation. So GAAP Incorporation statement of income. If you pay close attention, this is consolidated. So GAAP Incorporation also selling male clothing, female clothing. Under male clothing, kids, adult, suitings, formal dressing, casual dressing, kids, right? Infants. So it means summation of all sales, all the girls, adult clothing, suitings, formal, whatsoever, sleeping suits, whatsoever, right? So that's why we call this consolidated. Don't get confused. So first of all, you write down the net income and then minus cost of goods sold. What is cost of goods sold? Pay close attention to the word itself, cost of goods sold. So they sold this worth of amount. So this is in millions. 14549. It means $14,549 million they have sold. And in order to sell them, this much worth of raw material is, cost us for fabric, thread, right? This kind of stuff. And all other stuff is operating expenses like salaries. So these are salaries, utility bills, rent of the factory, anything else, right? Supervisor salaries, watch guard salaries, security guard salaries, driver salaries, this kind of stuff. So this specific cost of goods sold means the cost incurred on these goods to make. For example, the company made 1,000 units of suits, 2-piece, so 3-piece, right? Company sold only 800 suits. It means net sales is going to be in units 800. So this cost of goods sold is not going to be cost incurred to make 1,000 units. No, cost that you incur to make 800 suits going to be written here, because still 200 units that are unsold, that become your inventory, right? When we go to the asset side balance sheet, we talk about this. What do we mean by inventory? So I will be repeating this example over there. So, and then interest expense, income taxes, and we have net income. So how income statement is going to be reported on the statement? So first, revenue means net revenue. So let me write it down, net minus cost of goods sold, which is equal to gross profit. From gross profit, you less just how much? The operating expenses, which includes selling and admin expenses. Selling means all the marketing, campaign, advertisement, commission that you pay. Admin expenses, salaries of supervisor, clerical staff, accountants, this kind of stuff, right? And then you have operating income. In finance, we call this EBIT, earning before interest and taxes. And all you have to do, remove the effect of interest and tax. Minus interest and minus tax, you got net income. Simple. So this is the pattern that we need to follow. Net revenue minus cost of goods sold. What we have found, gross profit. So this is also a measure of profitability and how much you earn on your gross profits, on your sellings. And then you less all the selling and admin expenses. You find out that how much profitable your business operation is. And then all other interest and taxes, you will find out the net income. So there are going to be three kinds of profit here: gross profit, operating profit, net profit. Right? There are going to be three kinds of cost here: cost of goods sold, operating cost, and interest and taxes. Right? Everybody understand? Spike?
Yes, sir.
Oliver? Paulo, Mirko, David, Noon, Vinicia?
Yeah.
Yes, sir.
Yes.
Yeah.
Bruno,
Yes. Yes.
Subhan,
Yes.
Ken,
Yes.
Priscillo?
Yes.
Good. Let's move forward. Now, second is retained earning. So the statement of retained earnings shows what a company did with its net income, whether it distributed all to its owners or retained some portion with itself and then distributed rest of the thing distributed, or just doesn't distribute anything, kept all the stuff with itself. So it is the portion of net income reinvested in the business. So net income increases when net income increases the retained earnings, of course. What is the formula for retained earning at the end? Equal to retained earning beginning plus net income minus dividend. So if the retained if the net income rises, it means retained earning at the end also increases. If you distribute more, right, the net losses or dividend decreases the retained earning. So if dividend is, let me change the color here. So if dividend is decreased, retained earning also decrease, because this is a minus sign here, right? So the net income flows from income statement to statement of retained earning. So first, in order to calculate the retained earning statement, we need to have net income. And where we can find out the net income? Net income is a figure that we take from income statement. So first we need to make income statement. From there we find out net income, and then net income is going to be used in making a statement of retained earning or retained earning statement. Right? Now the important part here is that you also studied in the introduction to business, and that the payment of dividend is not obligation by the company. It's not like it's mandatory or necessary for the companies to pay dividend. If companies, if companies see the wisdom of keeping all the money with them, because in future they need to expand the business, they need to buy a plant and machinery, or they need to replace a big expense. So it's better to use their own earnings rather go to the bank and ask for funding, and that funding is not cheap. You have to pay interest, and interest decreases the net income, right? Okay, after making the retained earnings, okay, let's see it's how retained earnings are made. So this is the retained earning or actual retained earning of the GAAP incorporation, but this is 2 years retained earning. So normally we have to make 1 year, right? So it's 2 years, so don't just get confused. So 2 years ending 2012. So it means it's going to be starting at 2010. So sorry, 11, and 12 here. So you see here, beginning retained earning plus net income of 2011 minus the dividend, you will find out year-end retained earning of 2011. And then you need to add net income minus dividend, you find out retained earning at the end of 2012 retained earning, ending retained earning. So this is the same stuff, but 2 times they find out the retained earning, right? Now, after finding retained earnings, so that retained earning is going to be used in calculation of stockholder equity, right? So the balance sheet is also called statement of financial position. Statement of operation is called income statement. The statement of financial position is called balance sheet. So it reported assets, liabilities, and stockholder equity. And what is the formula for balance sheet? Asset is equal to liabilities plus owner's equity. Let me write it down. Asset is equal to liabilities plus owner's. We need to present it in report form. So remember, this balance sheet dated at, if you remember, I just circled down at. And also the previous, slides, I circled the amount at. So on a specific day. So if 31st December 2021 balance sheet, which this means the position of the company on specific date. If you say that, okay, if you are in right now in September 2022, and if you believe these facts and figures, you may be wrong, because during that period of 9 months, anything can happen, or even next day, anything can happen, right? So this is also called the snapshot or financial picture on a specific day. On a specific day, company's assets were 100 million, and that's it. Maybe next day it is 200 million, or maybe the value of the steel rises, so the steel corporation just increase its worth because value of steel rises. But this will show on a specific date. That's it. So how we make the balance sheet? So now let's talk about the details of balance sheet. First of all, we know that balance sheet is equal to for formalized assets equal to liabilities plus owner's equity. So let's just first discuss the assets side of the balance sheet. Or in accounting, you also if you find the textbook, it also mention over there the left hand side. So if you see your left, there is asset. The left hand side is called the asset. The right hand side is called liabilities plus owner equity. Your right, if you see that, liabilities plus owner's equity. Your left, you see that, assets. So in some books, it is written as left hand side on the balance sheet. So it is the assets. So in accounting, we categorize assets into 2 categories. Number 1, current assets, and number 3, long-term assets or fixed assets. Right? So if we change the color here. So what is the definition of current assets? Whose life is